Yo, what's up, guys? Welcome to another episode of X Trillions. Today's episode, we're going to be going over a HOD trade that we took on USD Huff. So, looking at this chart, right? First things first, we can see a vector candle bursting out of the Asia range, right to that G spot right there, that 800 EMA. Now, notice how price is bouncing down off of that EMA. So what do you think retail traders are doing, right? We know that they love selling these bounces off the EMAs. And as we can see now, the dealers have just made that huge burst up to clear out anybody that sold that early. So just watching this chart, watching the behavior, right? Look at that. Look at that huge burst up, right? So that candle has just destroyed anybody that was selling that bounce off the EMA, while simultaneously inducing retail traders to go long. And we know retail traders love to see breaks and closes above the EMAs like this. And look at the acceleration to the high, inducing longs. Inducing retail traders to click the button to go long right here. Two huge bullish bars. And look at that. Look how they snapped away from that high. So put yourself in the shoes of a retail trader, right? And I mean, I'm sure there's a lot of you there right now that are buying that, are chasing this, are clicking into the FOMO. You feel like you're missing the move, and that's exactly what these dealers want you to feel like, guys. So there we go, candlestick closed as a huge pin. Now that's a break and a close above the 800 EMA, the G spot, and then a huge pin to the high. Now look at the spread, right? If we're right in our assessment that there are retail traders trapped at the high, then we should see spread manipulation going on here. This is where they're trapping retail traders at higher prices than presented on the chart, right? Look how that spread is closing and opening and closing, inducing retail traders to click buttons. Once again, remember, it turns your MT4 terminal into like a casino. It's flashing lights, it's exciting. You want the action. They are provoking the parts of your brain that want that action. They're making you feel like you're missing out, you're missing the move, there's money to be made here. There's going to be a move about to happen. It's all of this stimulation, right? So looking at the spread, we saw it on higher numbers earlier, right? We saw it in the 20s, and now we're all the way back to 8, 9, and look how it's just it's staying low, right? So this tells us that the dealers are done working, and this is where we're going to make our entries. That yellow line at the high of the day, just above that pin, that is our wall of price that we do not expect dealers to go back up and release the trapped traders. So now we are waiting for our shift candle, the candle that puts us straight into profit while destroying any of the traders that bought this at the high. And there you go. Look at the speed. At X Trillions, this is what we trade. This is a perfect example of price getting away from your entry because you're right in your assessment, right? The retail traders are trapped. This is where they start thinking irrationally, right? And this is where they start trying to find any kind of solution or any evidence that they are still right and that price is going to go back up. But no, price just continues to melt. And look at how it bounces on the EMAs and the previous highs. You know, this is the sort of thing that gives retail traders that false hope that they are right and that price is gonna go back up. And while retail traders look at this from a very text point of view, you know, the EMAs should hold and support and resistance, all of this stuff, we're already in our trades and we're confident that when we're seeing these things, these bounces, we are seeing the retail traders and just expecting them to get crushed. It's a completely different mindset at X Trillions. Another thing to notice, we have two charts, right? We've got Euro Huff and USD Huff. Now, why we have the two charts, notice how the bar for bar, they are the same. They are a match in bar price. This is an added confluence that the dealers are working this particular currency. Okay, when you see multiple cross pairs doing the same thing, that is the fractional dance, the fractional disparity between the pairs. So continuing to bleed. Right now we have protected our entry, we are taking profits, our process is complete, we have taken our profits, we have protected our remaining positions. Now here's something that a lot of traders don't really seem to understand, and I want to see comments below. Consistently profitable traders consistently take profits. It sounds so simple, right? But I see so many traders. This is the hodl generation, I'm telling you. There's no process. Guys, you need a process. You need an entry. You need rules to manage the trade, and you need an exit. This is a business, so you know you have to treat it as such. If you treat this like a hobby, you will get results like a hobby. If you're willing to do the work, if you're willing to, you know, really put up what it takes to get good at this, then don't hesitate to hit us up and let's work. If you like this video, if you got some value from this video, please leave a like, leave us a comment, subscribe to the channel, and let us know what you want to see more of. Until the next time.